Can you actually get into a house with zero out of pocket? What's going on, guys? My name is Ivan Semintal and I am your trusted mortgage advisor. And today I'm going to talk about a few loan programs that are zero to very low money out of pocket for your down payment. If you guys have any questions, my contact information will be somewhere in this video, somewhere in the link. Please feel free to reach out with any questions that you guys may have if you guys want to dig in a little bit further. So I'm sure many of you have heard, hey, I just bought a house with zero money down. What is that? What does it include? How did they do that? Where did they get the money? Where did they not get the money? So I'm going to go over some common programs that will allow you to buy a house with zero out of pocket for your down payment. I want to be very specific when I say zero down payment, because with all of the programs that I'm going to talk about, we still have closing costs that are associated with the loan. So we have two things. One, we have your down payment. Let's think of your down payment is the house is $300,000. You're going to put X amount of down for the house, right? So that's that category. The other category is what that's going to cost you to obtain that house. So in the closing cost fees, we have appraisal, we have credit, we have processing, we have underwriting, we have title insurance, we have escrow, we have any other miscellaneous fees that could potentially come up. That is what is included in your closing costs. So again, we have your down payment, and then we have your closing cost fees. So now that we got that out of the way, let's talk about some specific programs that will allow you to buy a house with zero money down. So the first one and the most popular one is your VA loan program. What is it? This program is designated for active military members or veterans of the military and their spouses of the military. This allows the individual to obtain 100% financing for a property. So the qualifications are pretty straightforward. You need to be a veteran. You need to be an active member of the military. You can also be honorably discharged. And if you are in the reserves or the National Guard, you need to have at least served for 6 years. Now, what are the credit requirements? So that is a tricky question because there aren't necessarily credit requirements. It's either if you qualify or you don't qualify. I've seen VA loans get qualified with a FICO score of 550, 560, and I've also seen them get declined at that FICO score. Now, it just depends on how it's structured and how it's put together when it's submitted to underwriting. So the credit is very flexible, where you can go pretty low on the credit requirements. So keep that in mind when you are thinking about using your VA benefits and you're thinking to yourself, my credit isn't very good. You might be shortchanging yourself and you could actually get qualified for a home loan with the current FICO that you have right now. Speak to a professional, see if that's something that you could do and you can obtain. You never know. Another great thing about VA loans is that their interest rates are usually lower than the market standard. For example, the market standard is at 3%. Your VA loan might be at 2.5 to 2.75%. It just depends on where the market is that day. But rates are typically lower on VA programs. Also, another thing, you are obtaining 100% financing, and a cool thing is you don't have to pay any mortgage insurance or private mortgage insurance for obtaining that loan. The only thing that you do have to pay for either up front or you can include it in your loan is the VA funding fee. Now, many people may be asking, what are the loan limits for the VA product? There aren't necessarily any loan limits. It's if you have a good credit and you qualify for that house. It's not saying that you're capped at 500,000 or 300,000 or 700,000. It just depends if you qualify for that specific house with your credit, income, and your assets and all that good stuff that goes into trying to qualify for a home loan. Another loan that really isn't talked about much, but it's pretty awesome, is the USDA loan. The USDA loan does offer 100% financing if you are within the specific USDA zones. So USDA stands for the U.S. Department of Agriculture, and it offers 100% financing, again, in their zones. So a lot of people know this program as a rural program, but that doesn't mean it's only necessary for people that live in rural areas. There are some suburban neighborhoods that do qualify for this loan. Again, you have to check with your local lender. If you need somebody to be referred to, or if you need me to get you in contact with a trusted professional in your area, I can always do that as well, because there are certain zones that you might not think are USDA and they actually are. So it's good to look on the website or speak to a loan professional to give you guidance on that matter. So just like the VA loan, there's no down payment requirements. There are no maximum home purchase price requirements. Again, you can purchase 200,000, 400,000, 500,000. It just depends on your specific area and if you can afford it and if you qualify for it. Now, one of the key things that does disqualify a lot of borrowers from getting a USDA loan is their income limits. Again, if you need to know their income limits, you can look on their website, or again, reach out to a trusted professional to give you those income limits, because that the majority of the time does keep people from obtaining financing in those areas using their 100% financing option. So just like the VA loan, the USDA loans, their rates are typically lower. Why? Because they want people to move into those areas to stimulate that economy. So another way that you can obtain 100% financing is by these awesome programs that are called down payment assistance. And every state has their own specific down payment assistance program. Again, if you need assistance, reach out to a local trusted professional, or I can get you in touch with somebody in your area. So what are these down payment assistance programs? The majority of the time, they have minimum FICO requirements, they have minimum income requirements and maximum income requirements, and they also have a maximum loan amount that you can obtain. Every area is different, but I will talk about a few that are common in my area. One is called Chenoa, and another one is called Home is Possible. Both of these programs have specific FICO requirements that you need to meet. A lot of the time, people get disqualified for down payment assistance because of the FICO. Same thing with the income requirements. There are specific income that you can't make more than a certain amount to qualify for these grants, because these are grants given by the state. So what these programs do is there's several categories that you can obtain financing, right? So there is a 2% option, there is a 3% option, there is a 4% option, and a 5% option. So what does that mean? They give you 2% of the purchase price to put towards down payment and closing cost. Whatever you want to use it for, you can definitely use it for your down payment, or you can use it for your closing costs. The higher you go with obtaining the assistance, so say you go all the way up to 4%, the rates get higher. So the lower assistance that you get, rates get lower, and so forth. So if you're looking to obtain 4% or 5% down payment assistance, rates will be a little bit higher, but you will, the majority of the time, come with little to no money out of pocket, because you're getting your down payment plus a lot of your closing costs covered. For example, I had a client who took advantage of these programs and got into a house with $1,225, I believe, if I'm not mistaken. I might be off by a few dollars, but it was something ridiculously low. They were able to get the grant for 4% down payment assistance, plus they had closing costs paid for by the seller, and they got into the house for about $1,200, which is awesome. So again, these programs change from state to state, but they are in the majority of all states. You just, again, need to check in with your local lender and your local professional to see what type of down payment assistance options are available to you. There are some caveats where they don't let you refinance within a certain amount of time, and they don't let you sell. If you do decide to sell and refinance within a certain period of time, you have to pay back the prorated amount that they let you borrow. So say, for example, you have to stay in the house for 5 years and you sell in 2.5 years, you pay the remaining 2.5 years difference. Does that make sense? I hope it does. If not, you can reach out to me and I can dive in a little bit deeper and explain what I mean. So now let's talk about some programs that you can use to come out of pocket with very little down payment. And the most popular one is the FHA loan. The Federal Housing Administration doesn't necessarily lend you money, but it ensures that if anything goes wrong on your loan, that the lender will be paid back. That is why you have to pay what's called mortgage insurance. Now, the down payment for an FHA loan is 3.5%. And they do have looser guidelines to get approved. So you can go down to as low as 500 FICO score to get approved. Now, if you go down to as low as 500 FICO score, that doesn't necessarily mean that you're going to come out of pocket with 3.5%. The lower your FICO score, the more down payment. I believe it's up to 10% when you go down to 500 FICO score. But good news, if you have a 580 FICO score or above, you will come out of pocket with 3.5% for your down payment. Some cool things from the FHA loan: if you don't have all the funds for your down payment, you can receive a gift from mom, dad, uncle, grandma, grandpa, cousin, sister, brother. That is one of the cool things about the FHA loan, is that you can receive a gift for your down payment and your closing cost. And if you don't want to pay the upfront mortgage insurance premium, you can include that into the loan and then continue the regular mortgage insurance payments thereafter. So for an FHA loan, the loan sizes do vary from county to county and state to state. If you're in an expensive state, your loan limit will be higher. If you are in a not so expensive state, your loan limit will be a little bit lower. But the loan limits change year after year, so they can increase. I know we just got a boost here in Clark County. If you want to know what your loan limit is for your specific zip code in your specific county, again, reach out to your professional in your area that can help you and give you that guidance. And if not, I can always point you in the right direction. So now let's talk about Home Ready. What is Home Ready? Home Ready is a conventional product that offers a low down payment of 3%. So with the Home Ready product, there are a few guidelines that we need to follow, and the most important one is the income limit. Again, the income limit changes from county to county and state to state. Check with your local professional to see what that is in your specific area. Since it's a conventional product, again, talking about the guidelines, the maximum loan amount is $548,250. And the property has to be a single unit property and owner occupied. Those are very important details that you need to remember when obtaining a Home Ready loan. So guys, there you have it. These are some of the more common 0 to very low down payment options. We covered VA, we covered USDA, we covered down payment assistance, we covered FHA, we covered Home Ready conventional products. Guys, there will be more videos coming, so stay tuned. We do appreciate you tuning in. Have a wonderful and safe day. Again, this is Ivan, your trusted mortgage advisor.